Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the rebound of 70 cents after the measured move from the head and shoulders, the Australian dollar has continued to push higher and now tackling the 60-day moving average. Seeing at 71, just click on that, 71.70. It is ascertained that the market is likely to soon get into a bit of a struggle in terms of the fact is that the MACD hasn't quite fulfilled itself to the upside to the bull case, although the RSI, that is, did break through the midway point. I feel the market likely to retreat from around 71.90. This is where I believe that quite close to that breakdown level was, and then look back towards the support region, somewhere around 71.25, and then down towards 70.85. Overall, though, I feel this last stretch to the upside is coming quite close to an end, and hopefully, in terms of how the technicals are looking, should see a sharp reversal and possibly come back to the bear case. The US dollar, which measures the greenback strength against a basket of 6 major currencies, still remains somewhat soft as the euro pushes up back towards the breakdown level of 117.50.55. It is viewed that the bears are likely to return from this region as we get closer to it, which is only about 10 points away. From a technical point, though, the MACD hasn't quite fulfilled itself to support the bull case, so therefore the foundations to this rise is likely to be somewhat soft, and therefore expect to see a rejection anywhere from that 117.50.55 level and then down towards the support, which is seen somewhere around 117 to about 116.5, and then from there reassess, as we should likely see a further wicker play. The dollar yen is grinding to a halt after the recent rejection from 105.90. At present, we shouldn't rule out the test towards this top side of this range here, around 105.90 to 106 to figure. But from a technical point, you can see the RSI is nearly through the midway point, and the MACD is somewhat showing a histogram to a weaker signal. Therefore, I do feel that we are getting very close to a turnaround and look back towards 104 as a potential target, with 104.85 as the immediate target. The pound, since breaking the trend, has line of around, you can see a 127.80.90 area has progressed further. The bulls are attempting to squeeze higher as the MACD just breaks over the zero axis, but the RSI is overbought. Still, we should leave a little bit of room for error of judgment, that is, in case we get a rise anywhere from where we are to about 130, where we got the recent rejection, and then see a play back to the downside, which I do anticipate. The choppiness in the sterling yen has now put us back into a mixed view, with the fact is that we'd just broken through that level of 136.40.50, but saw no follow through, as we are currently at that level, as you can see. It is assessed, though, if the pound has got enough leg room for a squeeze to about 70 points, then this would see one more up step towards the high 136, but likely to be given back very sharply and look back towards 135. Gold is remaining steady after yesterday's presidential election between President Trump and Joe Biden, but the market isn't broken down and it's looking a little bit mixed, but still, from a technical point, holding to the bull case since the close above 1,884. I do anticipate that the market could squeeze higher up to about 1,922.26 and then reassess from this line here. We could see a reversal and look back towards the bottom side of the range, which can be anywhere from 1,880 to down to the bottom range around 1,820 to 40. But nevertheless, we are seeing a slight upstep towards the European session. Wrapping up, well, the 3.5 point drop for oil recovered it overnight. Still looks somewhat relatively bullish. I still feel the market has enough room to push up towards $42 or even up towards 43 as a potential target, and any weakness to play should only be temporary. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report and hope you enjoy the great start to this new